Bitcoin has a very clear path to 220,000 US dollars. And we have now 4 major catalysts for this upcoming bull run in Bitcoin. We have the Clarity Act, which brings a lot more inflows and capital from the TradFi world directly towards Bitcoin. We have in this upcoming bull run the Bitcoin halving happening again, and naturally and organically decreasing the supply of Bitcoin. We have an amazing macro picture that will make Bitcoin a lot more liquid, and with that bring even more money towards Bitcoin. And the fourth one is the 4-year cycle. I personally don't believe in the 4-year cycle, but up until now it has been proven right and right again. And according to the 4-year cycle, we have about 1 to 2 months left, and from there on out it's 3 years up and to the right. So enjoy. Let's start off with where we are. For the past probably 7 months, people have been shouting the bottom is in, and the people always have been wrong. And I've been probably one of those people that have said like, oh, the bottom is in, the bottom is in. Right now, the bottom, depending on where, if you look at the daily close or like the daily low, it's either 57,700 or 58,000. I like to look at 58,000 just because of the meme around 58K gang. How do you look at the structure, the macro picture, and the outlook that you're currently having on where Bitcoin sits in the market?
Absolutely. So let's start first and foremost Bitcoin lens, and then we'll go to a wider macro lens. So Bitcoin's bear markets historically have lasted for about 365 days, some 400 days, some 350, 340, but on average around 370 days, which is almost a year. So if we want to take October 6th as the all-time high, or you want to take the October 10 flash crash as the high, or the marker of the start of the bear market, we're within, call it 60 days left of this bear market, right? Historically speaking. So if you looked at the 2022 bear market, the 2018 bear market, and then prior to that, the 2014 bear market, you look at these different incidents, what ends up happening is these were periods of time which were about 365 days from peak to trough. And people are continuously expecting lower in Bitcoin because of historic average drawdowns. The average drawdown in each bear market is around 75%. Right now, we're currently sitting at around 52, 54% at the peak of the peak to trough drawdown. Now, why I would say that the bottom is already in and why expecting lower isn't reasonable, not to say that we can't get to say 55, 54 or 56 in a correlation 1 event, but the reason why I would say that the low is probably in and most likely in is that there is diminishing returns and diminishing drawdowns. So if you look at each cycle high, it has lower and lower returns. There's compression in the return profile, and the CAGR, the compound average annual growth rate, is also reducing, which is normal and to be expected as this asset class matures. You know, if an asset goes from say $1 billion to $2 billion to 10 billion to $100 billion, you might have an asset class now, such as Bitcoin, just shy of 2 trillion. If we get that same $2 billion of inflows, that market cap increase, that percentage increase isn't going to be as strong as it was when in its earlier years. So when people hear diminishing returns, they don't get as excited. But I would like to say that that doesn't mean that Bitcoin doesn't grow anymore. It will continue to grow at a much faster rate than traditional assets will. But we have to keep in mind that there's a compression in the return profile, which means that I'm anticipating a compression in the drawdowns. So the swings are going to be less. There's less volatility. And of course, some of the TradFi investors might be listening to this and saying, why is this Bitcoin broker talking about less volatility? It's still very volatile. Yes, it's still going to be volatile compared to traditional assets. But if we're comparing Bitcoin volatility historically, it is reducing and it is compressing. So we have most likely within 60 days and within 10% of the lows, and we're probably going to start a new upward cycle. Why am I anticipating an expansion which would lead us to 200 220k in the next 3 years, and why are we on the precipice of a new bull market? It's because of monetary policy. A lot of people are freaking out right now that the Fed in America here is going to increase rates heading into the September FOMC. Why I don't think that's going to happen, or if they do hike rates a couple of times this year, why it's not going to be a continuation of that trend, is because of the fact that there's a real strong demand from the fiscal side, the government side, the US government, in order to keep rates as low as possible. They need to have rates low. They've got a $40 trillion national debt here in America. It costs them almost $1.5 trillion a year to service that debt, right? And it's continuing to grow. So their interest expense is not only just increasing, but if they add another 25, 50 basis points to that debt burden, that's tens of billions of dollars of added interest expense that they cannot simply afford. So my reasoning for and the logic for the bull market coming to fruition and a bear market coming to a conclusion is that if we look at the wider macro picture, the debt burdens across the globe and governments continue to increase their deficit spending, rack up bigger and bigger debt, there is going to be a loosening of monetary policy to accommodate for rampant government deficit spending. When that happens, risk assets, predominantly Bitcoin, are going to absolutely fly because it's such a scarce hard asset. It's the perfect liquidity sponge for that excess liquidity to come into the market. And I would like to have your listeners and your viewers at home please pay attention to central bank balance sheets. There's a great tool, Trading Economics. You can jump onto Trading Economics right now, free, no cost to you to view this data. And if you look at the central bank balance sheets, they've been coming down since 2022. They're starting to have this upward inflection as of the last few months, and they're going to continuously expand as they come to accommodate larger and larger deficit spending from their governments. So it's really important to realize that whilst, yes, there has been a really savage bear market or a really long bear market, it's not longer than usual, and the drawdowns have actually compressed, and we're preparing ourselves for a much bigger push compared to what we've been historically used to as well. So a lot of the people are wanting to target things like $500,000 per Bitcoin next cycle. I just don't think that's realistic. I would also like to say that whilst we have seen majority of the bear market drawdowns complete itself, we need to set realistic expectations for the next target. This doesn't change Bitcoin's long-term trajectory. It's going to go up in perpetuity as the currencies get devalued. But we need to realize that this market is maturing significantly, and we're going to see Bitcoin at around 200, 220 within the next cycle peak. And that's a really exciting opportunity for us, because right now that presents a 3x opportunity for the astute investor. And we want people to understand that Bitcoin will be the perfect receptacle for excess liquidity heading into the next macro expansion.
I think I have this website up. I'll make sure that it's the correct one for people to see it. Is that what you mean? Like that website right here?
Yes, correct.
That's great. So, and the others actually have all the data. I've never seen that website. It looks really cool that you have all the different countries also.
Yeah, it's really good to see, and look at it, because macro dictates everything, right? From my perspective, if you're a macro investor, you've got a significant edge over a technical trader or just a fundamental guy. You're really reading the tape at that point, or you're just looking at price action, historically speaking. Now, this obviously is data that has come out, but it gives you a very clear picture as to where we are within the regime. Are we in a liquidity contraction regime? Are we in a liquidity expansion regime? Is monetary policy loosening or tightening? These are great ways to recognize, do I want to be risk on or do I want to be risk off? Now, for a lot of your listeners at home, they might be thinking of Bitcoin as a risk-off position. I carry that view as well. I view Bitcoin as safety. I view it as independent, hard, scarce money. That's my view and my perspective, and a lot of Bitcoiners will agree with me. However, that's not how we are traded by the wider investment community, right? Professional investors view Bitcoin as very much a risk-on position, and we need to wait for that risk-on regime to come in and for the AI bubble to, eventually dissipate or pop, for that liquidity to then come back into Bitcoin.
That's really interesting. And also, I'm curious, I think that actually I can show this to people, because I always like if there is a visual to that. I think that's what you basically described in the beginning, where we have those long upwards structural bullish movements, and then there's 360, 370, 300 something days where we go down, and we're kind of on the precipice of that, where we are basically entering the bullish era of Bitcoin. Now, it's fascinating because I said, I think a year ago, I think the 4-year cycle is dead. And I've been proven wrong for the past 12 months on that, because it's clearly still plays out. But if we now look at the data, it's basically saying the macro picture looks better and better for a bull market. And also the Bitcoin cycle thing, the Bitcoin data that we can collect. So basically everything is kind of screaming, we will be having a long bull run from here on out, even if it's maybe goes down a little bit more, maybe it's starting a little late. But structurally, if we think about the next few months, it's a great time to start being really bullish on Bitcoin again.
Absolutely. And, we have a number of catalysts in front of us. So 2027, which is when the Clarity Act here in America will most likely be signed, which will provide institutions, the name of the act, a lot of regulatory clarity as to how to trade in this environment. It'll provide security dealers a lot more clarity around tokenization, how that will affect Bitcoin. It will be bringing in a lot more inflows. The BTC ETFs will then receive a lot more inflows. They dictate a lot of the large purchases, and that drives the market higher. So that's in 2027 when it's most likely to pass. And then in 2028, we have our own Bitcoin halving cycle. So which means the scarcity of Bitcoin in terms of new supply, new coins becoming available is going to reduce significantly. And so you fundamentally have this amazing localized setup, which is Clarity Act, big regulatory change coming down the pipeline, 2027, a structural reduction in new supply in 2028, which will then give us this beautiful crescendo into 2029 when this market cycle really does come to its full maturity. And then in hindsight, it looks really good. And you mentioned how you got it wrong. I would also like to put my hand up and say, ladies and gentlemen, I got it wrong too. I like to say that I'm the best and that I see every move and I nail every trade. I've been in this markets now for 12 years. I know when to say I'm right and I know when to say I'm wrong, and have the humility to assess when I am. And that's what I love about you, Robin. So yes, I got it wrong too. I thought, because at the top of the last cycle in October 2025, I said, we got Bitcoin treasury buying, ETF inflow. We have a really bullish macro setup, and then got it completely wrong, right? We went from 125K down to 58K. So, and that's okay, because I am willing to accept that for what it is. But at the same time, we have to recognize that Bitcoin on every meaningful time frame has outperformed major traditional assets such as treasuries, real estate, outside of small single stocks, like not small single stocks, but outside of like the big AI tech plays. The broader stock market has actually underperformed Bitcoin over the last 4 years, including the recent drawdown that we've gone through. So, the whole idea that Bitcoin is over or it's dead or whatever, it's such a farce. But to be fair with you, this bear market, I haven't seen any articles of Bitcoin is dead, right? It's just Bitcoin is down, right? Which is previous cycles, it wasn't Bitcoin is down, it's dead. So it's actually showing that even amongst traditional financial media and traditional financial people, that this whole notion of Bitcoin going away no longer exists in their mind. They know that Bitcoin's staying. They're just assessing it with a different lens, which is it's a sign of its maturity as well.
It's actually a really great point. I've never seen such a bullish bear market. Never seen such a amazing. It's also, if you think about, we didn't really have a lot of victims in this bear market. Last bear markets like FTX, Celsius, in the beginning, Mt. Gox and all of those things. We always had some kind of huge catalyst, some kind of huge victim in the bear market. I wouldn't call Cold Card now a victim of the bear market, because Cold Card could have happened in a bull market as well. So it's not related to the bear market. So there's no victim yet, let's see, really, of the bear market. Of course, there's some Bitcoin companies that fired like 20%, 50% of their staff. There's been like Bitcoin companies that like have been gone a little bit leaner, but that's just normal cycle, normal market behavior, even outside of Bitcoin, where there's like maybe a slower phase where people have to be a little bit more lean to keep operating, which is very normal. But we didn't really have that huge, like, wow, like that happened, like Binance going bust or something like that. Like, it's crazy.
We did see some of the large public Bitcoin mining companies exit the space, dump their Bitcoin treasuries in order to pivot towards AI. So I believe it was Marathon that came out and sold all of their Bitcoin the other day, last week. Now, that I wouldn't call that a victim necessarily. It's just a sign of the times that everybody is now chasing AI compute instead of Bitcoin hash, and that's okay. That happens every cycle. At the end of each cycle, you see Bitcoin miners capitulate because the cost of running it relative to the production costs go below the actual value that you're receiving from the Bitcoin mining operations that you're receiving, or the Bitcoin mining or the Bitcoins that you're receiving. So it's quite natural part of the cycle. And then when we add the halving in, and we see this big drop in the difficulty adjustment, meaning that it makes it more accessible. So this is actually a positive thing. We see miners now, large public miners going down, which means that mining decentralization can increase. When the hash power comes down, it means that solo miners have a better chance at being able to mine a successful block. So it's actually a really good thing long term, but there have been some massive pivots in the space. You're seeing all these Bitcoin miners dump treasuries, dump their holdings, and then start chasing AI compute, which is probably a sign of how deep into the bear market we are in Bitcoin and how overextended the AI trade has become. Because whilst compute is definitely an important trade, and it's not something that I will see disappearing, when you're at the peak of inflated expectations, that's when there's these big deleveraging events that occur. If you look at how much debt, private credit is involved within this AI build out, it is quite concerning. So the private credit market is extremely overextended as they continue to fund these AI data center plays, as they continue to fund out these infrastructure plays. They're using their debt recycling as well. So they get debt, and then they get more land, they get more data centers, they get more ASICs, they get more compute, they get more chips, and then they use those assets to get more leverage. And so when you're borrowing against your assets to get more leverage, it's the signs of a time that we're towards the end of a cycle. And I would just caution, not say advise, but caution people who are chasing this trade. It is quite late. I'm not saying that it's done. It can continue to extend itself for many months or even a year. I'm not saying it's going to happen tomorrow, but just be very careful with these highly leveraged plays, that it doesn't even reflect the technology. The technology is amazing. It's something that's going to be around for a very long time, as is Bitcoin. It's just that whenever you get massive amounts of leverage, particularly in unregulated private credit markets, those deleveraging events are going to be quite substantial. When that happens, that capital is going to want to find a home. And then all of the Bitcoin community will be like, come to safety, come to the best performing asset over the last 10 years, come back home. So that's what's going to happen, in my opinion.
I mean, that's a side note now, maybe, but that's why I also caution people with any sorts of credit or debt instruments to get more Bitcoin. Like, you can borrow against a Bitcoin, like all of those things. Basically, if there's a big Bitcoin drawdown and you could get liquidated, it's probably not a good idea to go very strong in there. Make sure your safety range includes the hardest Bitcoin drop that you could possibly imagine,
Yeah, of
because
course, of course.
I don't think it will happen. But you don't want to be the guy that puts a lot of Bitcoin for collateral. It goes down 50%, you get liquidated, and it shoots back up 60%, and
Yeah,
you lost your Bitcoin, and the gain is also gone. Even though I'm warming up to the idea of financializing Bitcoin and like using it, but just like I want to, like, as you mentioned, that caution people, because I've seen people set up. I'm like, yeah, if Bitcoin goes to 45K, you're done, and
yeah,
like that's not out of the question. Like
yeah.
you don't have a setup like that.
Don't leverage the whole stack, ladies and gentlemen, is what we're pretty much saying here. Is like, if you got a 10 Bitcoin stack and you want to get access to leverage, and again, this is not financial advice, but don't go all in on one play, on one trade. Most of your Bitcoin should be sitting in secure cold storage offline, whether it's single sig or multi sig. That's a personal setup decision, but just don't chase leverage, don't chase trades, don't force investments to happen, because that's when you overextend yourself, overcommit, and end up losing more than what you've intended to in the first place. And so for me, I always have an extremely disciplined approach, not just as a private investor, but as a broker and as a custodian. We have to have airtight fiduciary responsibilities to our clients, which means we don't touch leverage, we don't rehypothecate assets, we don't provide lending services. Whilst people can obviously go after that, I just want to provide the cleanest possible service, because leverage really does become the death blow towards what would otherwise have been a great investment.
FTX hopefully taught us that, and I hope that most platforms learn from that. It's actually a great thing that you brought up before with the miners, because it is a positive thing that they're pivoting away from Bitcoin. It's such a weird thing to say as a Bitcoiner, but I think the decentralization and the security of Bitcoin is the number one priority of Bitcoin. And so publicly traded miners that make up a lot of the mining power can be. So Bob Burnett is such a great guy when it comes to mining, and he talks about the concept you want to have as many different sizes of Bitcoin miners as possible. He talks about, I think, the rabbits, I think the horses and the elephants. Maybe I got the animals wrong, but basically you have small rabbits. They are not as strong, but it's very hard to like shoot them. Like if you have like 100 rabbits in a field and you shoot once, like you're happy to even like get to one. It's very hard to shoot them all because they are running around, and like it's like hard to get them out. With horses, it's a little easier, but still hard if there's like 50 horses. Elephants is super easy. Like it's big, they make a lot of things, like, but you aim easily at them because they're very accessible. And so that's also how I look at like mining. We want to have like one person mining with like 10 miners in their garage as much as possible. We want to have small operators that have 1-2 containers somewhere with a lot of miners in there, but like not at scale as much as possible. And then also have public trade. Like we want all sizes to be really nicely distributed. And I saw the trend to more and more publicly traded miners, and I didn't like that. And actually the market sorted itself out and made Bitcoin again way more decentralized and secure with that move, because difficult adjustment things gives the opportunity for horses and rabbits to mine again.
Exactly. And I mean, if you see there's been some more successful, you can look at mempool and see the success of who mined that block, Foundry or whatever it may be. There's been more and more solo miners. Imagine you're running a small Bitax solo miner from your office or from your home, and then you come back and you find that you've mined successfully a block, and it's $180,000 US goes into your hardware wallet or the wallet that you've set it up for. It's pretty impressive, right? I mean, you work really hard. It's a $250 piece of hardware. You may be spending a few $100 extra in energy bills a month, and you walk away with $180,000. It's far better than trying to play the prediction markets. It's far better than trying to have a punt at betting on sports or whatever it may be. If you want to be actually able to run something that has a very low probability of occurring, but you're actually going towards supporting the Bitcoin network, and you've got the probability of walking away with, at current market prices, $180,000 or thereabouts with 3.125 Bitcoin. That's pretty cool. I've got one at home. I've got one in the office, so it's pretty cool. I love it. I encourage people to do so.
It's the best lottery to play. Like
Yeah.
the chances that you will actually hit a block, like just to be like realistic, very low.
Yeah.
But your chances are more likely that you hit a block than you win the lottery, and the payout is still good.
Yeah.
It's maybe not $1 million, but hey, if you just hold on to those free Bitcoin, they might just be $1 million quite soon. It's like you get a lottery and just keep on holding them, and the lottery might be way higher than the one you would have actually got in a real lottery.
Exactly.
I want to touch on something before that you said before we started recording. Even you said we are kind of putting that coil spring on, like we are like really structurally bullish. What do you mean? Like what do you kind of expect for Bitcoin to do with all the things that we've kind of like led on to already have, that now kind of happens with Bitcoin?
Yeah, well, the implied volatility on Bitcoin has been just absolutely crunched. If you look at the price action on the daily chart, it's literally more exciting to watch paint dry, right? It's just really boring price action right now. Less than 1 or 2% daily swings. Sometimes we're seeing days on end where the swings are 0.5%, 0.8% up or down. It's really boring and it's compressing. What that means is that whenever you see, and you can look at your own rolling implied volatility chart of Bitcoin, anytime you have these sustained periods of low volatility, it's always followed by periods of very high volatility, and then it goes back to low volatility. So I believe that I use the analogy of the coiled spring, is that right now the low volatility is, and the longer it goes on for, the bigger that you're putting pressure on that spring, and then the longer it stays on for, the longer you hold that spring down for. You're really holding it down. With the moment that you let go, it just blows out. So there could be a high volatility breakout to the downside or to the upside. I'm not saying that it's necessarily to the upside, but because we've been, nearly a year into this bear market, the breakout is more likely to be an upside breakout when the volatility does go out into a big expansion phase.
Did you also think, because I thought did you also think that 2021 and 2025 bull markets was kind of suppressed, was kind of like not as high as, maybe that's just the optimist and bull speaking in mid, but like when I look at a bull market like 2017, it was crazy, and 2021 and 2025 was just not as exciting as of a bull market, even though the price action was quite good.
It's a sign of what I was mentioning earlier, which is the maturity of our asset class and the maturity of Bitcoin, which is you can't expect, a 20, 30x return bull run when we're a $2 trillion asset class. It's very different from when we were a $50 billion asset class or a $10 billion asset class. So it's not as exciting as it was in 2017, and the return profile has certainly diminished, which is what we were talking about before, but that is to be expected. People are predicting 500,000 or even 1 million in the next cycle expansion. It's not so much manipulation, it's just growth of the asset class. You look at gold, for example, it's gone from, say, 2022 till now, it's gone from about $2,000 to $4,300 at the time of recording, with a peak of 5,600. It's only doubled. Right? When people say it's only doubled in the nominal price, the market cap has gone from $15 trillion to $30 trillion. So the amount of capital that has actually gone into gold over in central bank buying, and the balance sheet expansion of central banks using gold has been substantial, particularly in Eastern countries like China. They've been buying gold like nonstop. And so for an asset to go from $2,000 to $4,000, people go, oh, that's really small returns on a percentage basis. But it means that the market cap of gold has gone from 15 trillion to 30 trillion, which is massive, right? Whereas if Bitcoin was to go from, say, 2 trillion to 10 trillion, right, it's a fantastic return, right? It's a 4x return, but you're not going to get those big 20, 30 X's because it requires so much more capital to move into the space to then have that doubling every year or every cycle.
Yeah, it's the money that it requires gold to move or like some bigger market to move. It's crazy. I mean,
Yeah,
I'm already fascinated by how strong gold was kind of performing. That I did not expect gold to be doing that good. I know the gold price because when I got out of school, I got a small gold coin from my dad, and I kept that, and I kept on checking like what's it worth, and I think it was around $1,000 when I got it, and it's now like $4,000, something like that. Just like the gold in it, not the value of the gold. The coin itself might be a little bit more because like collector's item or whatever, but like just the gold in it, and I'm like, wow, like it's already a huge asset. Was already a huge asset back then, but it keeps on growing, which kind of shows how horrible our money is, how horrible the US dollar, the euro, and all the fiat currencies are.
absolutely. And I would like to also make mention that the people talk about Bitcoin as digital gold. I call gold physical Bitcoin, right? Because it's the OG hard money, right? It's existed for 5,000 years. I come from a Middle Eastern background, Lebanese background. Gold and silver is what we're taught from a very young age. You know, we don't believe in the Aussie dollar. We don't believe in the euro. My grandmother, she grew up at a time when $1 bought you 3 Lebanese pounds when she was a little girl. Now that same $1 buys you 15,000 Lebanese pounds. So if you think that your major currency like euros, and where I'm from, Aussie, Australia, the Aussie dollar, and here right now I'm in America, the US dollar, they've all performed substantially worse than each other. But pour out a drink for our poor brothers and sisters across the world who have seen their currencies completely decimated. Whether you're talking about the Argentinian peso, whether you're talking about the Lebanese pound, whether you're talking about any number of these currencies that have been absolutely just destroyed, there have been so many people's lives that have been caught up in this disaster that whether we're talking about gold or Bitcoin or scarce assets in general, we need to get as many people into Bitcoin as possible because I want to save them from the destruction of fiat currencies. So we talk a lot about price action and macro expansion and macro cycles, which is important to recognize where we are. But fundamentally, I'm against fiat currencies vehemently because I know that the value destruction that they pose is significant, and I'd much rather take on Bitcoin volatility than take on assured fiat destruction.
It kind of leads me to a question that I had also for you about the financializing of Bitcoin. We saw what happened with gold. I mean, that's now monetary history, but then with the central banks, the issuing notes, and then people using the notes and not the gold itself because it was more convenient, it was better, and all of those reasons. And so the power of central banking was getting bigger, while gold obviously also massively increased in value over the period of time. Do you think there is some risk? I mean, it's not really a risk because gold also got more valuable over time with that. Is there some kind of thing that you also see that could be bad for Bitcoin if we financialize it too much? People talk about BlackRock Bitcoin strategy, paper Bitcoin ecosystem.
It's not going to stop, guys, right? The financialization of Bitcoin is here to stay. And if Bitcoin is going to get to $1 million, it is going to become financialized. And I know I say this as a broker, and a lot of people are going to be throwing sticks and stones at me in the comments section. And you're welcome to do so and disagree with me. But, you know, the players are always going to stay the same. The assets will change. The structure of the markets will change steadily over time. But Bitcoin isn't going to become a global powerhouse asset just by, a few cypherpunks and freedom maxis and libertarians sitting in their basements talking about how they want to overthrow the government. Realistically, you need to understand that Bitcoin is the hardest and scarcest form of money that mankind has ever created and come across. And so, in that, you're going to have everybody involved. You're going to have central banks, you're going to have governments, you're going to have hedge funds, you're going to have Bitcoin treasury companies, you're going to have brokers like myself, you're going to have individual participants. But that's all part of the decentralization. Bitcoin is for everyone, including your enemies. We have to keep in mind that, Iran, for example, is using Bitcoin to set up a toll booth at the Strait of Hormuz. Now, I'm not necessarily a pro-Iranian individual, but at the same time, that I don't want Bitcoin to ever become this asset which is permissioned, that, oh, it's not for you, it's only for me, or it can be sanctioned. $500 million, $500 million worth of crypto, particularly stable coins such as USDT, were seized from Iran by the Department of Justice, right? And so you have to keep in mind, right, that these are assets that, we have on-chain assets like stable coins and cryptocurrencies that are pretty much just the same set of permissions that we have to use within the fiat banking system has just been replicated on chain. Bitcoin is the only asset that provides us genuine freedom money. And what that means is that everyone's going to be using it, even people that you don't like. So if you don't like Wall Street and you don't like the central banks and you don't like hedge funds and you don't like the suit and ties and you don't like you don't like people from the other parts of the world, it doesn't matter and it doesn't care, nor should Bitcoin care. It's for everyone, including the people that you don't necessarily agree with or like.
Absolutely. Bitcoin is for enemies. Do you see a possibility with strategy like MSTR? It's almost like a new central bank.
Yeah. I mean, I see them as the new banking cartel, right? So people talk about, the creation of JP Morgan as one of the largest institutions. JP Morgan was such a powerful banker that he would bail out the US government. During the panic of 1907, he actually bailed out the US government. Can you believe that? And so then the creation of the Federal Reserve was a collection of 13 families who got together and said, it's a private institution, mind you, the Federal Reserve. And they went out and said, we don't want to have, massive currency valuations and panics in our banking system. We're going to be the buyer and lender of last resort. And that was effectively the creation of the Federal Reserve. I can see that happening again with MicroStrategy. That doesn't necessarily mean that I'm excited for it or excited by it, but it just shows you the maturity of our asset class and the maturity of Bitcoin as an asset. And as a global digital currency, you're going to have all kinds and manner of people using it and issuing credit against it and doing and there's all of these kind of crazy maturations and, preferred dividends, preferred shares, all this kind of crazy stuff. That's going to happen, guys. You can't stop it. And yes, I agree with you that Michael Saylor is going to become the new JP Morgan. What you think about that, I'll leave you guys to argue about in the comment section.
It's so interesting because I see so many people get so upset about strategy or Saylor or anything like that. And I'm like, if you believe in Bitcoin, this was always going to happen. Even if Saylor and strategy didn't exist, someone else would have done it. Someone else would have figured it out. So I always say this story of strategy and Saylor was a natural force of Bitcoin that will be happening. Even if he, like when he in COVID thought, like I should do something with my cash, and he would have maybe put it in gold or like in the S&P 500 instead of Bitcoin. Another company would have come and would have done the same thing that Saylor did the last 6 years.
Absolutely. There's always a vacuum when it comes to these things, and it will always be filled, right? So if Saylor was to collapse tomorrow, which I don't think is going to happen, and I don't think is going to happen anytime in the future either. But if there wasn't Saylor, you're absolutely right. There would be someone else. And if we have Saylor in the way we know about him today, and he disappears tomorrow, someone else will come into that void as well. So whether we like it or not, it's going to happen. But if you just want to be, a solo miner running a couple of ASICs at home, and then you want to have your Bitcoin in, secure single sig cold storage with a passphrase, and you don't, not your keys, not your Bitcoin, and you want to use coin mixers and lightning channels, and you don't want to be completely off the grid, you have every right to do so. But Wall Street and the rest of the players in the financial markets aren't going to leave Bitcoin alone to be just, traded amongst a group of cypherpunks and libertarians. Whilst that would have been a nice dream, it's not a reality. We have to realize that Bitcoin becoming a massive institutional asset means that institutions are going to get involved, whether we like it or not.
And I think there's a bigger point to be made. If you believe Bitcoin is what you believe it is, you don't need to care about what anyone does with it, because it's bigger than any individual, it's bigger than any institution. And so if you don't like what Seyr and Strategy is doing, just mute it on Twitter and you will not hear about it again. Just do some keyword thing where you don't hear about them anymore and live a chill life. Because if they're blowing up and going bankrupt, you get cheaper sats. That's great for you. If they are super successful, they will pump Bitcoin very high. So that's also great for you if you care about Bitcoin. So if you're a Bitcoiner, you can feel indifferent about Strategy and Seyr, but most don't.
And if you get offended or upset by somebody else doing what they want to do with their Bitcoin, you're just pretty much like what you describe as what you don't like, right? From my perspective, I don't care what people decide to do with their Bitcoin. I only care what I do with my Bitcoin, which I've earned and which I've paid for and which I've worked really hard to be able to acquire my Bitcoin stack. What somebody else decides to do with their stack, it's their choice. It's free money, right? If somebody wants to go out and blow their Bitcoin into a casino and gamble away, there's online casinos that accept Bitcoin, for example, and you deposit your hard-earned Bitcoin and you dust it because you're gambling on online roulette tables and online poker tables. That's your choice, and you have every right to do so. And if Seyr wants to go out and build out a new central bank, it's his choice. He has every right to do so, as long as he does it, transparently and ethically and doesn't misrepresent his credit products, then go for it. So I believe it's for everyone.
By the way, it made me think, because you said, or like we said, if Strategy would have not been founded the way it is, someone else would have done. Do you think the same thing is true with Bitcoin? Like if Satoshi Nakamoto would have not done Bitcoin, that at some point someone would have come up with a solution that is like Bitcoin? And I ask specifically because I think the creation story of Bitcoin is such a magical one, I can't believe all those pieces fitted together the way it did.
Yeah, and people think Bitcoin's history started in 2009. I would encourage all of your viewers and listeners at home, look into pre-Bitcoin history into cryptographic currencies. It's a fantastic and really wonderful thing to learn about. Cryptographic currencies has been a concept that's existed since the 1970s. So just shortly after the creation of the internet in the 60s, which was a military technology at the time, the idea of a internet money was born in the 1970s, guys. Literally not long after the US abandoned the gold standard, the idea that we can trade with each other through some form of online permissionless money was around for 50 years prior to its creation, or 40 years prior to its creation. And it's a fascinating understanding and research piece. Jump onto Grok, jump onto Claude, and ask about cryptographic currencies pre-Bitcoin. It's a fantastic thing. And effectively what was solved was the Byzantine general's problem, which is the double spend problem. That's what Satoshi Nakamoto's white paper was managed to solve. Because prior to that, we did have forms of electronic cash and online money, but what we couldn't solve was the double spend issue, which is if I've sent you 1,000 units of online money, how do I know that I've also, how do you know that I don't have those 1,000 units anymore, right? How does the network know? So that was what was solved in 2009. And it's a fascinating piece of history, and it's worth learning about because it gives you a far greater conviction in the asset that you're holding, other than just hoping that the number goes up.
Yeah, I think conviction building is super important, especially in those low times. Man, I've seen so many people turn bad in Bitcoin, and the only reason they do it because they really never fully understood what Bitcoin actually is. And so if you don't understand what Bitcoin is, you're most likely to sell low and buy high.
It's so true. And it's like a lot of the times, conviction building should be easy right now. We're in the information age. We've got an abundance of information. You can ask these questions yourself online. You can go onto AI, which is the collective knowledge of humanity, and actually spend time researching this asset and researching this currency for yourself. It's not hard. You don't have to just shout at me in the comments section. You don't have to get angry with Robin because he's expressed his opinion. You can do your own research. And you always hear this: do your own research, do your own research. Now you can so easily just query these amazing AI and really sit down with it. I mean, Seyr created a digital currency, digital credit pyramid scheme using AI. He went on to a podcast recently with Stephen Bartlett, Diary of a CEO, and talked about how he created Stretch with a fever dream using ChatGPT, which is mind-boggling to myself. But guys, the world's your oyster. If you can create a $10 billion credit instrument using AI, you guys can learn a little bit more about what it actually is using those same tools.
What do you think is the impact of AI overall? I think not on Bitcoin, but just like on humanity. What do you kind of, with all those possibilities and just being at the starting ramp of where we are in AI world, what do you kind of expect from it?
Yeah, it's like it's akin to the discovery of fire, in my opinion. It's like fire, wheel, railroads. Then you've got the internet, and then you've got Bitcoin, then you've got AI. It's like this continuation of amazing technological innovations that really help humanity a lot. Now, what direction that takes, who knows? Because the same fire that we use to be able to create amazing things and uplift our society as well created weaponry, created wars, and then there's this idea of resources and land, and there are obviously a lot of negative things that can come out of AI in general in terms of how it can impact humanity, but how it's used can be either positive or negative because it's just a tool. In my opinion, I think it's all technology is inherently neutral. People ascribe characteristics of good and evil to technology for whatever reason, which is a bit nonsensical to me. Technology is quite neutral. How it's utilized, how you use that technology decides whether the actions are good or evil, not the technology itself. The same sword or the same knife that helps you prepare your meal can help you can cause you to take someone's life. So but it's not the knife that's the issue. It's you who's made the actions to harm someone or to put something together to create something. So yeah, people always look at technology as the issue when it's actually the application of that technology that's the problem.
Yeah, you can cut open some vegetables and some fruits with knives, and they're two different things, but it's the same knife, just the different use of it. That's fascinating. Like AI. Like I think if I didn't add a Bitcoin podcast, I probably would focus either on some other investments, but most likely on just AI. It's just a vastly interesting field with so many implication on daily life. Maybe even more direct daily implication than Bitcoin. I don't know if you agree with that, but we have people already using ChatGPT normally and having an impact on daily life directly, as opposed to like Bitcoin being a more indirect, having more indirect exposure and more indirect implications to people's life.
Well, if intelligence becomes commoditized and, there's this extreme abundance, you have agents completing daily tasks and life becomes incredibly easy. And there's, there's some concerns about what that means for people's labor and jobs and, would we end up on universal basic income? But generally, the premise of what AI promises is a future which is full of abundance and everybody's time comes back to them so that there's no more keyboard monkeys smashing it together spreadsheets when it's all being done for you by the AI. And you couple that with robotics, which takes away people from having to be in these high risk positions, whether it's in the mines or whether it's in whatever it is. You combine AI with robotics, you've got both blue collar and white collar jobs pretty much no longer being needed. You've got the owners of those agents or the owners of those robotics, earning the income or the labor of those those robots and those AIs. It's actually a really interesting thought exercise. But in a world where there's this excess abundance, a really scarce money such as Bitcoin becomes even more valuable, in my humble opinion. Maybe that's just the Bitcoiner in me, which is always saying Bitcoin goes up or finds a way. But if eventually, if there's agents and robots that have these AI powered intelligence that creates this extreme abundance in our world, then a ultimately scarce asset such as Bitcoin is going to become even more attractive. So that's where I look at it.
With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control. And I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
Yeah, I 100% agree. One thing I also want to talk with you today about is you moving to America. You came from, I think, Australia, and a lot of people think about in the Bitcoin ecosystem around moving. We had in 2021, 2022, the big like El Salvador thing, people moving to El Salvador. People in general, especially in Europe, feel a little bit left behind from the politicians and they're like, where can I go? Where can I move? How did you came to actually moving away from Australia towards America, and how was kind of your thought process or framework to think about that decision?
It was really easy because for us, America is the largest and most successful capital and financial market on the planet. And so for me, I just want to be having exposure to a space which 350 million people, 1 in 4, 1 in 5 people invest in Bitcoin and cryptocurrency here. Bitcoin, for example, has exceeded even gold in terms of how many people actually invest in it here in America. So for me, it was just a massive, massive opportunity to come into a market, to come into an asset class that has matured significantly, has grown significantly. I want exposure to America because I know that it's going to do me quite well, because Australia is 25 million people. We're 27, 28 million people. We're a small island nation. Here in Texas, where I'm based, it's 45 million people in Texas alone, right? And so it's almost double the population of Australia. So I have an abundance of opportunity here. And America is the most robust capital market and the most robust financial market on the planet, second to none by a long shot. And so for me, it made a lot of sense. Back home in Australia, I've got about 10,000 clients that I've been servicing for about 4 years as a broker. Now I get to come in and render that service here in America to a market that is far larger. And so it was a really obvious decision for me to come to America. And Australia recently, we've got a wonderful gentleman known as Anthony Albanese as our Prime Minister, who's an incredible socialist. He wants to take away people's resources, assets. He wants to nationalize people's life savings, their superannuation or retirement funds. So, and we're now pushing a 47% effective tax rate as a business owner and high income earner, which is quite painful. And so I'm looking at alternatives, and America was very appealing to me. Texas specifically has no state income tax. And so if I'm setting up here as a corporation, then you get far more effective tax rates, and you walk away, if you're earning in America, you retain more of your hard-earned dollars, if you will. And so for me, it was a really logical decision, both personally and commercially, to come over here.
I love that. And like sovereignty is very important, and people don't speak enough about where you live in your sovereignty. We talk a lot about why Bitcoin is so important for sovereignty. We talk a lot about maybe running a node, self-custody, privacy, even like, I don't know, VPN, like password managers. Like we talk about so many different aspects of sovereignty. But like one aspect that impacts you probably the most when it comes to your personal freedom is, where are you living? Like what jurisdiction has the power to put you in jail? What jurisdiction has the power to demand taxes from you? And all of those things. It's, I think, a very important decision, like to search where you want to actually live.
Absolutely. And I mean, you can have your businesses set up in each of these jurisdictions, because I'm not leaving Australia. I'm still going to continue to service Australians and New Zealanders. That's where my home is. That's where I met my wife. That's where I have my kids. So it's not like Australia is over for me, but I just know that my own personal residence doesn't have to be in that country. I can serve people. I can have a registered, licensed, compliant company in that jurisdiction, earn there, pay my taxes there, and then myself as an individual, I can be domiciled or based wherever. Bitcoin is a global asset. I can be, in Bermuda or Bahamas. I can be in El Salvador. I can be, I can wake up one day and go to Portugal. Portugal's got very nice taxes for long-term Bitcoin holders, 0%. So that's pretty cool. So, there's always these amazing ways that you can become a global citizen, because you've got a global asset. And then you still have to, if you're setting up businesses and rendering services, you still have to be compliant. You still have to be regulated. In my case, licensed. That's okay. But that's where my businesses are operating out of. Myself as an individual, I can be based wherever I like. And that's a very powerful position to be in. And that's why I actually really love Bitcoin, is because I can wake up one day, pack my bags, take my wife and my kids, have my entire wealth with me in my own cold storage, and end up anywhere without having to worry about, my real estate's back home in Australia, or I have to find a way to move half a ton of silver, or I have to think about how am I going to, sell my shares and then buy shares in the new country, or if I sell shares in Australia, it's in Aussie dollars, I then have to convert it to US dollars. It's just a nightmare, right? Whereas here, got the Bitcoin, moved into America, still have the Bitcoin. It's such a powerful thing.
It's truly global money.
Yeah, correct.
Really, really cool. Is there something else? I'm just curious. Is there something else besides moving, besides having a business, besides like Bitcoin? I mean, that's already like huge. That you do that increases sovereignty, something that like people might have not think about, that still increases your personal freedom?
Yeah, what you eat and what you drink as well. I mean, I focus a lot on my health, to make sure that I get to enjoy my hard work. I get to enjoy my labor. I get to enjoy my Bitcoin, is because I watch what I eat. I make sure that I eat good food. I filter my own water. I make sure that I have really good sustenance, so that way I'm maintaining my health, maintaining my sovereignty, because there's no point in being this disciplined financial services professional. There's no point in being a disciplined investor or a disciplined Bitcoiner if I have a lack of control in my personal health that doesn't allow me to enjoy all of that discipline that I deploy in the financial markets and for my clients. I have to make sure that I get to do that as well. So, little practices like walking wherever I can, getting to the gym 30, 45 minutes a day, doing my jujitsu training. It's just because, good health and good food, it just alleviates the burdens and pressure that you could otherwise put yourself into. And that really does increase sovereignty, because freedom isn't just what you can do. Freedom isn't just being able to do anything. Freedom is also exercising what you don't do. that's a really powerful idea. Whereas if I've got poor health and then I'm now having to go to the hospital every other week, or I've got to go into, the health is really the number one priority. Because if you're not in a good position, you're not happy, you're not healthy, it doesn't matter. You might have $100 million Bitcoin stack and you're, dying of, an illness, God forbid, knock on wood, that never happens to me or any one of us watching the show, but you'd trade your entire Bitcoin stack to be healthy. You know what I mean? And so you always got to prioritize your health, in my opinion.
Yeah, that's this great question. I think that brings a lot of clarity. Is if I tell you, do you want to have like $1 million right now without strings attached, people will take it. But if I tell you, you can get $10 million right now, but the only string attached is you only get 2 more days to live, nobody takes it.
Of course.
Because the time is way more valuable than any amount of money. And the funny thing is, even if you're a millionaire or if you're a guy on the street, nobody would take that offer, because like 1 more day is worth way more money than you can ever give me. Like it's like the time is the most valuable thing that you can possibly have, and trading time for money directly, like having less time just to get a little bit more money, is usually not a good idea. So prioritizing health and well-being, and then hustling as much as possible before taking care of the foundation, it's always a great choice, which is hard. I guess you're same as me. I want to work so much. Like I have sometimes these urges at like 11:30 p.m. where I have a great idea. I'm like, I want to tackle this now. I don't want to wait till tomorrow. And then you spend like till 3 a.m. You work on it, and then you're tired. You wake up the next morning, the whole day's gone because you didn't sleep nice and all of those things. I became very disciplined of like the sleeping time, the eating time. And I realized I actually get more things done when I'm consistent with sleep, consistent with eating, and consistent with my health practices, also like going to the gym and things like that. I'm way more productive and way better in life, with my social life, with my work life, if I actually get I call it foundations done correctly.
Absolutely. Everything in moderation, including moderation itself. So I'm not living some sort of monk lifestyle where I only eat, steak and rice, and I'm not just, living in a mountain somewhere where I'm not engaging with people. Go out, have fun, enjoy that glass of wine, eat good food, go to, if it's nice in Europe at the moment, go to the south of Italy, go to the south of France, enjoy your life, right? So my main message here, sovereignty and freedom, is just an abundance of choice, but just as important as what you do with those choices is what you don't do, because it's life is beautiful, and I'm so privileged to be here, to run my business, to get to be able to service American investors, but it is a lot of work, right? Because when I finish my day here in America, the Australian desk, our Aussies, are waking up. And so I still have to run my business back home in Australia. And so then my day starts all over again at 6 p.m. at night, after already, having been up for 12 hours, dealing and trading on the phone. So it's a privilege and it's a blessing, but the harder you work, the more opportunities you create, the better quality of life you have, the more important it is to be able to switch off, get your rest, and not be online chronically all the time, which is a hard thing to do because I'm chronically online myself. So maybe it's a message to me than anybody else.
I often wonder, I mean, there are very successful people that take a step back and enjoy their life. I think Jeff Bezos is an interesting example of really like making a huge company, being super successful, and now it feels like he's still working, but like it feels like he's more like focusing on being like a huge bodybuilder, focusing on his life and all of those things. Like just from the outside, I have no connection with him whatsoever. Just from the outside, it feels like he's more relaxed and focused on life than building the next big thing.
Yeah,
Then you have on the
Ray.
other
You got
side.
look at Ray Dalio. Ray Dalio, which was the CEO of Bridgewater Associates. He's 77 years old. He was partying in Ibiza. Ibiza. All right, it was crazy. He was just there, and he put up a video of him, like 77 years old, man. The guy's ancient, and he's just like discoing at Ibiza at a beach party at a beach club. It was really funny to see. So it goes to show, got to have fun.
But then there is also the Elon Musk model, where I'm like the more successful he gets, the more things he comes up with to fill his calendar. I mean, he has an interesting private life with, like, I think 3 wives at this point or something like that, and like 12 kids or something like that.
He's going to populate the world. He's going to populate the world. We also have to keep in mind Elon is a fantastic, brilliant individual, but he's also severely autistic. So it just kind of comes with the territory.
Yeah, he would be probably a really hard interview guest, just because, like, the way he answers things and the way he talks. Like, I think it's not easy to talk with him.
No, I don't think so. He thinks on a different wavelength, which is part of the reason why he's so successful.
He's if someone tells me he's an alien, I have a hard time arguing against that.
I think it's really wonderful to have these conversations. These guys are really the creme de la creme of, thinkers and entrepreneurs and inventors. But look, from my perspective, I just try to focus on my own little bubble, focus on my Bitcoin stack, focus on my business, and I'll look up occasionally and go, oh, okay, that's what's happening over there, and then come back to what I need to do. But, it's important to step out of our echo chambers sometimes, because, I've been raised and born in Australia my whole life. I've done a bit of traveling here and there, but now I'm living in America. It's such a different experience, and I definitely encourage the viewers and listeners at home who are, wanting to take that leap of faith, go and want to live abroad, or not just travel, because you can travel as a tourist and holiday somewhere and enjoy it for what it is. But really, if you've got an opportunity to live abroad, I encourage you to do it, because it's actually a really awesome experience.
100%. If you go, I have no clue how to translate this in English, but basically I think my granddad said that if you go abroad, they're gonna rip open your brain. In English, it does not make that much sense, but they basically, like, your horizon, your perspective will, like, widen a lot, opposed to, like, just being in your country. And that is valid for whatever country you're in. I mean, it's more valid for some other countries, like if you're in North Korea, your horizon will very strongly be broadened than, I don't know, if you're in America or like Europe somewhere. Because we get so much also with, like, the internet and all of that, but it's still very valid of, like, just move somewhere else. I also have this weird thing, I don't know if you have the same thing. If I'm traveling in a plane and a train or somewhere, I'm way more creative than, like, otherwise.
Yeah, I mean, for me, I was flying over the Pacific from Melbourne to Dallas, and because we have no internet, I got to actually switch off for the first time in years. 16-hour flight. I could actually just think without having to have the device connecting to the internet and having to talk to people or respond to trades or whatever. And it was really good. I got to think clearly. I agree with you. The more you can switch off, the better, the more creative you become, and then you come back and you've got these awesome ideas. So yeah, it's great to do so. There's a lot of people now spending lots of dollars or sats on digital detoxes. They actually go to these retreats in these, secluded places, and part of it is you hand over your phone and your laptop physically, and you switch off completely. There's no devices, there's no internet, there's no nothing, and all you do is just think. You sit by a waterfall, and people spend tens of thousands of dollars on that. So it's easier to just put it in the drawer and then go outside and play in the park. It's more cost effective.
Just rent an Airbnb for 2 days and leave your phone at home.
Yeah, correct.
I'm curious, just for me personally, because I always, like, I'll just ask you, like, what do you do on a 16-hour flight with no internet? Like, are you having a book or just like a notebook, or like you have some films loaded? Because, like, in 16 hours, you can watch 3 movies and still have like 10 hours to go.
I did spend most of it sleeping, to be honest with you. So like I just went and because I wasn't uh, switched on, I wasn't having to attend to anything. I could actually really get into a deep sense of sleep. Whereas usually I sleep 4 or 5 hours because I've got like this anxiety. I need to get up. I need to do something, and so I just slept for half the flight, and then for the remaining for the remaining 8 hours, I just mainly spent some time just sparring out some ideas. And I was reading that I had an audible of The Big Print from Lawrence Leopold, and I was just writing some stuff out from the actual audible, things that stood out to me to then be able to speak with my clients about when I was coming into America, right? So long flight, half of it was spent listening to an audio book of Lawrence Leopold's The Big Print. He's an amazing individual. I encourage everybody to read that book, and the other half was just spent horizontal sleeping.
That's probably a great way to spend 16-hour flight. Thank you so much. Thank you so much, Bisher, for being on the podcast. We have an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asks you a question. It's really an interesting one, actually. Is Bitcoin valuable as a store of value because it's also a medium of exchange, or could it live without it being a successful medium of exchange?
Oh, that's powerful. I only believe it's a successful store of value because it has its medium of exchange properties. Because if it just stores value and you can't use it, or you can't exchange it for goods and services, and you always have to go back to fiat, then what good is it doing? It's just an extension of the fiat currency system. So in my opinion, Bitcoin is valuable as a store, as an SOV, because of its medium of exchange property.
I agree with that. Really cool. Thank you so much, Bisher, for being on the podcast. Before I let you go, where can people find you, your company, the things you're doing? Where's the best way to reach out?
Yeah, stormrake.com. We service Australians, New Zealanders, and Americans in the USA. And this isn't an ethnicity thing. You can be a Brazilian or a Polish gentleman living in America. As long as you're a resident, we can serve you, and we're looking forward to take care of you. So stormrake.com. We're a brokering service to help people buy and sell Bitcoin through a simple old world service. So Robin, you've been in this space for a long time. You want to deploy meaningful capital, you give me a call. I find you the best price in the market because we don't make money on spreads or price premiums. We find across 20 different venues the best possible execution points. And then that's where we hit, and we charge a flat fee commission to do so. And that's how we operate. And we've been servicing about 10,000 clients back home. Here in America, we've got about 200 investors that we're servicing as well. So a simple on and off ramp is the best way I could describe it for the masses, but we also provide a personalized service so that way you're not making mistakes along the way, and help you navigate the banks as well.
Awesome, man. That sounds really cool and exciting. People reach out if you live in those areas. I don't, unfortunately,
Okay.
but maybe in the future.
Our plan is in 2027 to open up an office in Madrid. So right now we're operating in Dallas. One of my brokers back home in Australia, his name is Alvaro. He's from Madrid himself, Spaniard, lovely gentleman. He's going to help me expand into the EU as well. So don't worry, Robin. I'm coming. I'm going to save everyone. First, I save the Australians, then the Americans, then the Europeans. So step by step, we'll get there. But we're probably about a year away from servicing EU. But Australia, New Zealand, America, let's go, baby.
Europe needs it. Europe needs it. So as fast as you can. I'm happy to come to opening party in Madrid. I already invited myself now.
I would. It was already sent to you just yesterday, so the invitation's already gone. So I can't wait. It's going to be epic.
Awesome. Thank you so much, Bisher, for being on the podcast. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.